Car deductions can be a big expense for your business, and many taxpayers struggle with how to write off their cars utilizing their LLCs. In this video, I am going to explain to you what you need to do to be able to write your car off underneath your LLC. And if you stay to the end, I am also going to show you how you can write off 100% of your vehicle under your LLC in 2023. Car deductions are a great expense for business owners, but business owners struggle with how to get those write-offs. IRS is fully aware that many business owners make errors in this area of tax deductions, which is why I want you to understand what you need to do. The very first thing that you need to understand is you have to keep excellent documentation. IRS does not play around when it comes to car expenses. So you're going to want to make sure that you keep track of your mileage. The best way to keep track of your mileage is to get some type of app on your phone and track your business miles. The other way that you can keep track of your mileage is to also make sure at the beginning of the year that you get an odometer reading, and you can do that by having your vehicle repaired. They typically take an odometer reading when you go in for any type of repair, and then at the end of the year you also get that odometer reading, because it's important that IRS is able to determine how many miles you put on that car for the entire year. And then you can actually use your calendar to determine how many miles you use for business. So that's one thing that is extremely important, is to keep that mileage log and have that odometer reading so that you don't get yourself in a slinky in the event of an IRS audit. The first thing I want you to do is determine whether or not you're going to take the standard mileage rate or you're going to try to deduct actual expenses. This is something that people typically get really confused on. When you are trying to deduct your car as an expense, many people may decide they're going to take their actual expenses. When you're taking your actual expenses, you're taking things like your actual gas that you pay out of pocket, your actual insurance, your car washes, your repair, and your actual car payment, whether it's a lease payment or whether you're taking the interest on a loan that you have on your car. So if you determine you're going to take actual expenses, you're going to capture all of those expenses. If you're going to do the standard mileage rate, then you're going to keep track of your mileage. But here's something that I need for you to know. If the vehicle is in your name and you want to be able to take actual expenses, you have to be very careful, because IRS does not like for business owners to write off car expenses where there's actual expenses involved, where the vehicle is in the name of the actual business owner. The vehicle needs to be in the name of the business for you to be actually able to take your actual expenses and do it correctly. Many of you may be thinking, Carla, my vehicle is not in the name of my business. My vehicle is in my name personally. Am I still able to take my write-off as a business? If the vehicle is in your name personally and you want to write it off under your business and you want to actually take actual expenses, there's a special way that you need to do that. The way that you want to do that is you want to lease your vehicle to your business. Let me give an example of how that works. Let's say that I am running 123 Tax Services and I own a vehicle that is in the name of Carla Dennis. And let's say that that vehicle payment is $700 a month, and I want my business to cover the payment plus cover all of the expenses associated with operating that vehicle. The insurance, the repairs, and the gas. But that vehicle is in my personal name. What I need to do is I need to lease that vehicle to my business. That means that Carla Dennis is going to write up a lease between myself and my business. And every single month, my business is going to write a check out and pay Carla Dennis for utilizing that vehicle. Let's say that I determine the car payment is $700, all the gas and all the other expenses come to roughly $1,000 a month. Every single month, 123 Tax Services is going to write out a check to Carla Dennis for $1,000. every single month. The money has to move. On the tax return for the business is going to categorize that $1,000 check as auto expense. And that is the way your business is going to get the tax deduction for the vehicle expense. On my personal income tax return, Carla Dennis is going to report $1,000 a month or $12,000 a year as rent received from renting out or leasing my vehicle. And I am going to report that on Schedule E. You might be thinking, well, that's going to put additional income on my tax return. Hold on a moment, it won't. Why? Because yes, you are going to report that income, but you have to report the associated expenses. You're going to report the actual insurance that you pay. You're going to report the actual gas that you pay. You're going to report the actual car payment that you pay. So at the end of the day, you are going to have gross income of $12,000, but you're going to be able to write off the expenses so that you net down to zero. And on your business return, you're going to have that deduction $1,000 a month or $12,000 per year as auto expense. The way you're going to determine how much that lease is going to be, that your actual entity is going to pay you, you're going to look at your average expenses. You're going to take the car payment or lease payment. You're going to take your average gas expenses. You're going to take the amount of the insurance, and that's how you're going to determine that amount and generate that paperwork. Therefore, it's all going to be paperwork proper so that in the event of an audit, you're not going to be concerned about IRS disallowing your expenses. Many of you may be thinking, well, I never heard that before. My prior accountants haven't told me that. I just want to let you know that IRS is really looking at automobile expenses heavily, and they want the proper documentation, and that is the way that you properly document it when that vehicle is in your personal name and you want to write it off against your business. If you are taking the standard mileage rate, you can do it completely differently. You're going to track all of the miles, and then you're going to take the miles times the standard mileage rate that is in effect for that particular year, and then that's going to become the write-off that you're going to utilize against your business. So want to make sure that you understand that if the actual vehicle is in your personal name, how it's going to be handled, and if the vehicle is in the name of the LLC, how it's going to be handled. Two different ways to handle it. You're still going to get that massive tax write-off, and you're not going to have to worry about your expenses being disallowed in the event that there is an audit. When you are using a standard mileage rate, it's important that when you calculate all of those miles and you keep track of it, that you keep those very detailed records. Then you will multiply the actual standard mileage rate times the amount of miles, but be very careful that you're only deducting business miles. It's so important that you understand that, because if you're trying to take 100% of your vehicle as a write-off against your business and you only have one vehicle, IRS is going to push back on that, because we have to own the fact that we may indeed be utilizing that vehicle for personal. So a good rule of thumb is if you have a total of 10,000 miles on your vehicle for the whole year, go ahead and only take about 90% for business, because we know we're running to the store, we know we're running errands, and IRS knows it too. So give IRS what's theirs so they can allow you to take all of your business deductions, all of your car write-offs, and you don't have to worry about anything being disallowed on your tax return. When you operate your business and you are trying to take your vehicle expenses as a sole proprietorship, you have to make sure you use Form 2106 to properly allocate your car expenses over to your Schedule C inside of your 1040. It's very important that you do that. If you're taking the actual expenses, you want to make sure you add in depreciation. Many of you are leaving out expenses such as depreciation when you're taking actual expenses. And depreciation is your ability to recover the cost that you paid for your vehicle. As an example, if you paid $20,000 for a vehicle, depreciation allows you to write that cost off over 5 years. So you want to make sure that you get your depreciation expense And if you're taking actual expenses, when you're taking a standard mileage rate, depreciation is inherent in the rate. So you're not going to add on top of the standard mileage rate depreciation. When you are operating as an LLC and you're in a multi-member LLC, you're going to be writing off that car expense on Form 1065. It's very important you use the proper forms. When you're inside of an S corporation, you're going to write your car expense off on your Form 1120S. If you are operating as a C Corp, you're going to take that car expense off on Form 1120. There's not going to be a separate car form that you're going to utilize when you're operating in a multi-member LLC, when you're operating in an S Corp, or when you're operating in a C Corp. You're just going to put auto expense. Different from when you're in a sole proprietorship or a single member LLC. Operating as a sole proprietorship, you're going to use Form 2106. It's so important for you to understand that because many of you are putting auto expense as a sole proprietor and as a single member LLC on a certain line of your return, and that's being done incorrectly. You can take great tax deductions in terms of your vehicle expenses, but doing it the right way is very important. Remember, keep track of your mileage. All of your mileage, get those odometer readings. Remember, are you going to take actual expenses? Or are you going to use the standard mileage rate? Remember, do you own the vehicle or is the vehicle in your name personally or in the name of your business? The way the title's held is going to determine how you write it off. And now that you've stayed to the end, I told you I was going to tell you how you can write off 100% of your vehicle in 2023. You want to be able to use Section 179 deduction plus bonus depreciation, get that vehicle listed as equipment so that you are able to take 100% of your tax write-off. And remember, now that you know better, you have to do better. That is why I want you to like, comment, and subscribe so I can keep you updated on all things tax.